I have been trading for 4 years, and only out of 2 of those 4 years, I have been trading profitably. And throughout the years I wasn't trading profitably, I made loads of trading mistakes. Now, one of these trading mistakes was trading loads and loads of Forex pairs, because at the start of your trading journey, you're introduced to this wide range of Forex. And there's all these different pairs like GBP, JPY, Australian dollar, US dollar, and there's all these things that you just don't know which one's the best, right? What do you trade? Which ones do you trade? Which ones are the best for the time frames you're able to trade? Which one out of all of them do you pick? Do you even need to pick one? Should you trade all of them? Should you trade one of them? And as a beginner trader, it's really, really difficult to identify which ones you should trade, how many you should trade, and why you should trade them. And I finally managed to become profitable at trading once I only settled for 2 Forex pairs. And if you want proof that I trade profitably, my Discord server, which is the top link in the description, shows all my trading for years and years and years. Every trade I take, I post live on here, and we have funding screenshots and stuff like that for proof. So link in the description to join yourself. So what was my story? So back in the day, I used to trade 25 Forex pairs. I know, it's crazy. I used to spend each New York session and each London session just going through and scrolling through all 25 pairs, and I'd stare at them for maybe about 25 seconds max, and I would just be like, okay, no setup there, move on, no setup there, move on, no setup there, move on. Actually, this one looks like there's got a good setup on it. Let's pick this one. And I can't even begin to tell you how many problems I ran into doing this strategy. First of all, about 6 or 7 of the 25 each time would have a setup, but I can't take 7 trades at the same time, especially when I'm trading with funded accounts, because let's say you have 3% maximum daily drawdown or 5% maximum daily drawdown. To reach that, you'd have to be risking less than 1/4% on each trade, which just really isn't realistic or exciting to do. So then I'd have to worry about, okay, which of these entries am I going to pick? Which ones look better? Then I'd have to go 7 different tabs open, looking at each different price action, trying to pick which one's the best. And it was just really stressful and overwhelming. And of course, I made 0 progress trading. It's because I didn't actually have time to worry about which trades am I taking, how good they were, how accurate they were, did they actually follow my strategy? Instead, I had to spend very little time looking at each one of these charts and thinking, okay, this has got to sell up, let's just place it and hope for the best. The second problem I ran into was that a lot of Forex pairs are actually correlated, such as GBP USD and Euro USD. If you go to your chart right now and bring up those 2 pairs and you put them side by side, you'll realize they're actually quite similar. And this is because they're both against the US dollar. And if something's against the US dollar, it's not, the US dollar is the major currency, so the one to the left of it, the prefix currency, isn't really going to make that much of a difference. Now, of course, the 2 charts aren't going to be exactly the same, but they're going to be very similar, which means you'll likely get the same setup on both of them. And if you go for both the entries on both the trades, let's say you wanted to risk 1% per trade and you enter both those trades, you're technically risking 2% on the same trade, because if one hits stop loss, the other one's going to hit the stop loss because they're correlated. And it might not be the exact same pip, but it will be within 10-20 and the charts will look the same. So you'll end up risking 2% per trade, even though you're taking 2 trades, but you'll still be risking 2%. And if you're trading a funded account where you have like 10% maximum drawdown, risking 2% is actually quite a lot. And that was a problem I ran into. Now, this is the same for like Australian dollar, US dollar will look similar to GU and EU. Stuff like GBP, JPY will look very similar to GBP, USD because they're both GBP pairs, and just things like that where the pairs look similar. And if you look at the charts, you'll realize it's actually really correlated. So what you need to do is you need to make sure you don't trade correlated pairs. So when you narrow down your Forex pair selection, you need to make sure that none of them are correlated. And when I started trading profitably, I realized the importance of sitting down at your chart and spending about 20 minutes going through each time frame that you like to use and just properly analyzing the chart. And this doesn't just mean staring at it and think, okay, yeah, this looks like good, maybe it's not consolidating. It means staring at each time frame and working with your mind to figure out a bias. Starting with a daily, thinking, okay, what has price been doing the past week, the past month? Is it trending? Is it consolidating? Are there near areas of support, areas of resistance? Are there areas of liquidity? Then what areas of liquidity do I think price are going to go to? Do I think price is going to bounce off this support zone? Do I think price is going to break a structure? What do I think price is going to do? And this isn't something you can just do in 30 seconds. You have to stare at the chart. You have to mark out these zones. You have to do analysis. Then once you're done with the daily, you have to drop down to the 4 hour. Do the same thing. Mark out these areas of like support and resistance or liquidity that aren't showing on the daily chart. Then do this again for the 1 hour. And at this point, you have a few lines, boxes on your chart, but you have an overall picture over all the time frames of what the price is doing and where do you think it's going to go next. Because when I traded, I went 25 Forex pairs on the 1 hour chart and I would just go click, 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 click through them. I wasn't looking at any other time frame. I wasn't looking at the bigger picture. I was literally just looking at the window in front of me at like maybe 100 candles and thinking, okay, this is a good trade. Well, trading is more advanced than that. You need to look at more time frames. You need to do more analysis. You need to draw on your chart. You need to actually have a picture in your mind of where you think price is going to go. So as soon as I started realizing that I actually had to do proper time fulfilling analysis, it made it really unrealistic to trade 25 pairs because I would spend all day analyzing every Forex pair and I'd have to write down on a note about what pair's doing what because I'd forget if I moved on to the next pair, and I'd spend all this time doing all these notes like, oh, what did GBP with JPY do yesterday and what did Euro GBP do 3 days ago? Oh, I forgot, let me just check my notes, but oh, I actually got it wrong, the chart's different, just I might be yapping, but you can see how complicated it is. And if you're going through something similar, you might be understanding what I'm saying and thinking, yeah, that's my trading. Maybe if I switched up, I used less Forex pairs, I could fix the problems that Ralph is saying right now. So if we're going to talk about my strategy, when I stopped trading with 25 Forex pairs, it helped me actually trade much more profitably because I trade liquidity concepts and I trade areas of liquidity between one area of liquidity to another one. And these areas of liquidity are going to be on the daily chart, the 4 hour chart, the 1 hour chart, the 15-minute chart, the 5-minute chart, and I finally enter on the 1-minute chart. And by the way, if you want to learn my strategy that I use to trade profitably, I will leave it just up there in the top right hand corner of my strategy, exactly how I trade. But this trade video isn't about that. Okay, we're going to talk about Forex pairs. So I trade on the 1 minute time frame to enter my trades, but I'm still looking at about 5 other time frames to get an overall picture and, more importantly, an overall bias into where I think the market is going to go. Like, for example, if we go into a trade I'm in right now, this is gold and it is currently consolidating a little bit about a 1R. But why I entered this trade, right? And I won't tell you about my thing, but I started on the daily. I saw we swept liquidity here and I drew out all these zones. On the top of the wick of the daily is liquidity. We had a line here for liquidity that I deleted because we swept it. Then I went down to the 4 hour and you can see, look, I'm drawing lines on all these wicks and there's lines on my chart, I'm analyzing. And then I went to the 1 hour time frame and I see, oh, look, liquidity's up there. We just swept this liquidity down here and all this resting liquidity over to our left. Okay, this is a good entry. Let me go to the 15-minute. 15-minute, we have a downtrend, but we look really oversold. Let me get the RSI up, What is the RSI said? Oh, the RSI said we're really oversold as well. We're down at literally 11, 12 there. Okay, I think price is going to go up, okay? Like I'm looking at indicators. I have indicators. We swept Asia lows, we swept London lows, and I'm going through these time frames and I'm getting an overall picture of what's happened and I'm drawing on my chart. I'm looking at the previous year on the daily. Like we're in an uptrend on gold. Now we're consolidating. What is price going to do? Well, it's likely probably going to continue to consolidate in this range. So I should buy at the bottom of the range and sell at the top of the range. And right now we're at the bottom of the range, so I'm in a buy position. And it's things like this where you go through the chart and you analyze properly that I just wasn't able to do when I was trading that many Forex pairs. If you're wondering what Forex pairs I trade gold and I trade Euro USD. They're not correlated, they couldn't be further from it, but why do I trade them? It's because they're the two most volatile Forex pairs in the Forex market. And I trade a strategy on the 1 minute and I just want price to go up, sweep my take profit in half an hour or just stop me out in about 5 minutes. I don't want to be staring at the chart for hours and hours stressing over, what's it going to do now? Should I get out? Because I end up just overthinking and making stupid decisions. So I trade those two pairs because they are the most volatile, but also it is because I started trading with these two Forex pairs. And the next thing we'll talk about is how you can actually get a feeling for a Forex pair if you trade it for long enough. So our next segment is about getting a feel for a Forex pair. And this pretty much just means where you've been staring at a chart and a Forex pair for that many years that you start to actually get a feeling for what it's going to do. You start spotting patterns throughout your trading journey. Oh, actually, I saw that pattern last week. Last time I entered, it stopped me out, but then the second entry I did worked. And actually last month, did the same thing. Every time I entered for the second time, it worked, but the first time I got stopped out. And it is this sort of thing that allows you to get used to a Forex pair just by staring at it for that long. And if you trade 25 pairs, you're not going to be able to get used to them because you're going to be completely overwhelmed. You're not going to be able to do in-depth analysis for one of them. You're not going to be able to spot patterns in all of them. Like for gold, for example, I realized recently that when I entered the first trade, I got stopped out, but then price would continue lower. Let's say I bought, stop me out, but then actually have another setup, and this time the buy would work. And I started realizing after a few trades, after a few weeks and a few months, that okay, gold likes to stop me out on my first trade, but then actually listen to my trade on the second one. So let's stop taking the first entry and start taking the second entry. And this actually made me have a lot of progress in my trading journey, trading through gold. And it's this sort of concept where you can start understanding patterns and adapting your strategy to that pair simply because you have so much experience trading that pair. And this is why I heavily recommend lowering down the number of pairs you trade. And next up, just simply the amount of time that you have to spend on the charts trading that many pairs, because trading, it's supposed to be a freeing experience. You're supposed to make money from it. You're supposed to be able to escape your job, escape school, all these things from trading. But people are making it their full-time job by sitting on the charts for 8 hours a day. Like, what's the point of trying to escape school or a 9 to 5 just to have a 9 to 5 on the charts? Like, for me, trading is simply just wake up in the morning, look at the chart at London session. Do I see an entry? No. Okay. Go to the gym, do some other stuff, record some videos. Okay, New York session. Look at the charts, half an hour. Do I see a setup? No. Okay, I'll call it a day. I'll move on with my life. If I trade that many Forex pairs, it's going to get to about 1 o'clock before New York session, and I'm sat there, okay, Australian dollar, US dollar, we're going to have a higher time frame breaker structure and then a liquidity sweep. But GBP USD is going to do this, and then it's going to correlate. But also Euro GBP is looking a good setup. But which one am I going to pick? Because my fund account won't let me take these many trades at one time. So what do I pick? Okay, let me wait an hour, and then I'm just pressing my down arrow on my keyboard for all the pairs when New York session opens, and it's like, okay, which one am I picking? What am I going to do now? It's just, you don't want to do it. Okay, I've been there. It's just stressful. It's just pointless, and it was a big mistake. And I never traded profitably in it because I never actually understood any pairs. I never understood what they did. I could never adapt my strategy to anything. It was just horrible. And if you take anything away from this video, it is just to lower the amount of pairs you trade, because it can be exciting trading 4 pairs because you get a lot of entries, but you're not going to be getting high quality entries. You're not going to be able to get an entry that you fully understand where price is going. And if you want to learn more about that, about understanding where price is going, again, I'll link that video in the top right hand corner just up there for you to see. And yeah, you can watch that after this video. But anyway, join my Discord, link in the description for my trading community, nearly at 400 members. I post all my trades on there every day. You can take the same trades I do. You can learn the strategy I use. But other than that, thank you very much for watching this video, and I'll see you guys all next time. Peace.